Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over the pullback, which we suggested was highly likely to be possible on the Bitcoin chart, as well as where it found support, which was also securely in the momentum zone that we pointed out here on Alpha Commission so that you could plot out your potential trades and not just FOMO in on the pump like a degenerate ape, but actually get in on a nice pullback. And so, guys, let's go ahead and just to see what stocks look like. Of course, stocks did have a bit of a mixed day, and that's largely because, well, yesterday was a fairly bright green day, right, across the board in almost all asset classes as the dollar did pull back. But part of the reason for the red in today's stock market is, of course, the ADP Employment Report, which the ADP Employment, it basically measures job creation among private businesses. And so that grew by 208,000 in September, which actually went against the estimate of 200,000. So basically, we've had a rise of 12% over the 185,000 jobs created in August. And, basically, according to this report, annual pay increased by 7.8% for workers. And so while wages for job changers, people who switched their job during this period, actually increased by 15.7%. So the news basically shows that the jobs market, which is a function of how hot the economy is still hot, and that suggests that the economy is not slowing as much as the guys in the Federal Reserve, Jerome Powell, and some of the hawks would want to see, which does suggest that they could be increasing interest rates again, and perhaps even again after that, in order to really cool down the economy and get rid of the liquidity that appears to still be out there from all those trillions of dollars dumped during the COVID era, right? These companies are still using that money to expand their operations, and they're taking out loans additionally to do that, which then, of course, just increases inflation overall, especially as these workers compete for jobs. Since there's two jobs for every worker that wants one, that means that they're competing for salaries, right? Which means that we're getting more and more inflation. And so the Federal Reserve wants to bring job creation down so there's only one job for every person who wants a job in the United States. And then the pressure on wage inflation will go down, and that should also help keep the cost of goods down. And they will consider that to basically be winning the war on inflation. But as long as jobs are out of control, then also we can consider that inflation is still running hot, and that the Federal Reserve will still be very tough on this market. And so that's why you saw that pullback in the stock market as well as on crypto. Of course, there are technical reasons for this, and let me also point out. Just what we were calling over here in Alpha Commission yesterday, just for transparency and truth in advertising, down pretty significantly, meaning that this move is likely to continue, okay? Because the tolerance that we have is much lower, and so we can have a pullback. And look at this, my momentum zone actually lines up with the naked candle, so we can have a pullback all the way back to 19,700, and we still reasonably have a chance of pumping. Okay, that's also in line with that weekly 4 EMA. Now, for my purposes, I don't want to go below there. I'm going to be highly skeptical, and of course, that is because of our macro downtrend. And so, normally, I would give you these numbers of, let's say, 19,250. Let's just say 19,250. You don't want to lose 19,250, okay, guys? You don't want to lose 19,000. But If you want to have this breakout, stay alive, then we really can't break 19,000. 730-ish, 750. Let's call it 19. Okay, guys, so I just wanted to show you that these momentum zones that I'm creating, while they might not be beautiful or very artistic, right? I am using them in a very predictive way and also in a very tradable way. You don't break this blue box that I set up for the daily, then you're pretty much good to go, Alpha Fam. If you can get on top of that blue box, then guys, we are bullish, right? And then these white boxes, they are just a suggestion. They're just a projection for the next like 2 to 5 days, what we would possibly have to hold because no one can see really that far into the future in trading. This is a very fast moving market, very, slick assets that just pump and dump very quickly. And so, using this daily blue box, my momentum box is an incredibly useful tool. And then also applying some logic based upon our actual price structure is super important to just add to that because obviously price is king. But what you saw me say there is that I would like us to stay above 19,700 in order to be, to have a solid chance for this pump to continue. And then, of course, if we were on top of the blue box, even better. But let's go ahead and just see what actually happened because, of course, we have our macro downtrend, and that's what we were fighting. And I said, guys, don't just FOMO in on the pump, you are going to get wrecked. And guys, what did everyone do in the market? They FOMO'd in, right? They FOMO'd in at this pump and they just got wrecked, guys. Okay, so what happened is the market was obviously going to have a check back. We were starting to put in some bearish divergence, right? And also, I had pointed out in my last video, right, which is that we had a second big boss. And that second big boss is no joke, guys. It's no joke. This is a several months resistance that we've had ever since this huge capitulation moment. And so this limitation on the chart is no joke. You can catastrophically dump from this area. And breaking out of our macro downtrend doesn't mean that we're macro bullish. You can still be in a macro bear trend even though you break out of your macro downtrend line because you can simply draw a new line. And as long as it's pointing down, you're still in a downtrend. Yes, we broke out of the downtrend. That doesn't make us bullish. You can always draw a new line, and we're not bullish until we're making macro lower highs, right? Or pardon me, higher lows on the macro, and we're simply not doing that sufficiently and we don't have any proof of concept of a higher high either. So we do not have any type of bullish trend. We simply have a tiny formation that we're kind of just bouncing around in. And everyone who's getting super excited, just remember we were $20,000 a couple days ago, a day ago. We were $20,000 a couple days before that. We were $20,000 a couple days before that. We were $20,000 a week before that. We were $20,000 a week before that. We were $20,000 a week before that. We were $20,000 a couple months before that, right? So guys, like what are you really expecting here? You have to deal with the reality of these potential, right, catastrophic dump points rather than just FOMOing in like degenerate apes. Okay, of course it could always make sense to DCA and take a DCA point while Bitcoin's under 20K. Okay, I understand that those levels are great for a potential DCA, and the lower the better. The lower you go, the more you want to buy actually, because what happens is that you end up weighting your price to the downside. But some people just full port, right when they're reaching resistance, and it's completely idiotic. I mean, you sell at resistance, right? You BCA, or you buy for trades on pullbacks. And yes, we got a pullback. And look, it's exactly what those momentum boxes that I pointed out were suggesting, which is that we would likely have a pullback perhaps to the bottom of this momentum box, but because of this downtrend, we were likely to find support there. And where did we actually bounce? Where is that wick bouncing from? 19,750. What did I suggest that we needed to bounce from in the video that I just showed you guys? I said 19,700. Where did we bounce from? 19,700, right? And 50-ish, right? Something like that. So guys, this is no joke. Please pay attention when I'm, setting out these momentum zones. They will be useful to you. We did not lose the bottom of that box. And so also that should have been a cue to you that even though we had a pullback, even though we dipped under this macro downtrend and re-entered the macro downtrend line, briefly, it was just a wick. And if we look at it, look at that. What a teaser. Look at where price action closed exactly on my line, guys. And so this was just a tease to shake out the weak hands and liquidate everyone who FOMO'd because they would have been panicking seeing us dropping back into this macro downtrend. And because these weak hands, these degenerate apes, these guys who always get hoodwinked and fooled by the market because they just can't control their emotions, they run in on pumps and they get shaken out by little pullbacks, and they have no set of logic that goes with it. They're just running on intuition, and those guys get wrecked. The market beats them every time. That's why I'm trying to create a system that can be reliable. And that system would go by using some obvious setups rather than just going by intuition. And of course, the obvious setup, right, on the daily for this move was our good old EMAs, right? And so where should you have entered? You should have entered down here at a 19,400, or perhaps even down here at 19,350-ish, right? Yes, we got shaken out a little bit there, but when we re-entered the squeeze, that could have been a good sign to get back in. You would have grabbed this move, and you would have still been in profit even if there was a pullback. And so trusting these EMAs to show you the way, and then also having reasonable stop limits, but also having the willingness to get back into the market if it ends up being just a fake out, right? They got me here, but then we noticed that the squeeze play was back on, and I gave you the conditions for the continuation and the bullishness, and they were satisfied. And so what do we have? Conditions, validations, and then confirmations. And this right here, this pullback, is the confirmation of the breakout. So guys, I can say we have confirmed our breakout, right? We had the conditions for it with this squeeze play, right? We had the validation in that we passed the line, right? And so we could actually watch our theory coming to fruit. And then we had the confirmation where we found support on the line after having broken out of it. And that's how you use conditions, validations, and confirmations. You just don't shoot by the hip. You don't go by your intuition. You don't go by just emotional degeneracy. You use a system of logic. And then if you can also throw something on top of it, like my momentum tracking areas right here, where I can see how are we doing on the momentum. Obviously these have changed over the last couple days because they're dynamic, and I update them daily. But once we pretty much satisfied the daily momentum zone on this squeeze play, that and it's been basically in the same area because we've been chopping out this same region, then having satisfied that, that would have been your perfect entry right there, no later than 19,600. And of course you had all that room from 19,300 to 19,600 to make up your mind over 1, 2, 3, 4, 5, 6, right? Over 6 days. So basically, you had a week to plan this out in case it were to happen. And that's why we look at both the upside and the downside. And so that's just a little note on how to think about these things. Now, guys, of course, we do have to update our momentum boxes because no, we did not satisfy the condition for daily bullishness. We did not hold on top of yesterday's box, and that's why you saw us fall down through the momentum zone and then tag this diagonal. What used to be a resistance has now been flipped into support, at least temporarily support. We have 1 day's worth of confirmation on that. And then, of course, we did not violate the bottom, so we were not bearish. So I'm just going to get rid of this old box because now it's time to update it with a new daily. And look here. Wow, I plotted out a new daily before this candle closed, before while it was red actually. I made this new momentum box and look what's happening. We're actually sitting on top of it. And so if we can close on top of this momentum box by the end of the day tomorrow, then it will look quite bullish for Bitcoin. And I could say maybe this is a bull flag, right? Maybe this is a bull flag. And of course, we didn't fall down into our 2 to 5 day yesterday. So I am going to delete that one. It just wasn't relevant for us. We did hold above it, which does suggest the 2 to 5 day could have some potential bullishness to it. Look where we bounced off right here, that wick. Let me turn off these EMAs so you can get a little bit of a better picture. Where you see this candle wicking all the way down, we did wick on top of the momentum box for the 2 to 5 day, right? The white boxes are the 2 to 5 day, and the blue boxes are the daily. And so, yes, we confirmed bullishness on top of the 2 to 5 day. That's just a projection. And so, we can get rid of this one, and let's find out where our new 2 to 5 day projection is. The new 2 to 5 day projection is a little bit more ambitious. It's a little bit stronger here. And so for both the daily and the 2 to 5 day, if we want to maintain that bullishness on top of them, then we do have to be on top of the blue and the what I'll change to white now because now it's the current day, the white box. And what we don't want to do is, again, we don't want to lose below this blue box, which is going to be 19,460. So, guys, to recap the key levels to watch on Bitcoin, if we do close tomorrow, tomorrow afternoon, if we have a daily closure above 20,150, it will look pretty bullish for Bitcoin. I'll just say 20,160 actually. And then if we have a closure underneath or above 19,470, let's say, then we're still going to have a chance, guys, okay? Like we could have a pullback all the way down to 19,470 and there's still going to be a chance. But what we do not want to violate, we do not want to violate 19,060, okay? So key levels for Bitcoin, do not violate 19,060, otherwise we're bearish. What we would like to minimally hold above is 19,470-ish. And then if we can continue to stay above 20,160-ish, then we're going to be bullish, guys. These momentum zones are no joke. They are calculated, guys, using math. They are not just me just putting up blocks up here. Okay, I do this for your benefit, whoever may be watching, and you can make your own financial decisions. But I've showed you for several days in a row how these blocks are working successfully, and of course they are based upon these momentum zones and then also price action. If you want to see what's going on from just a patterns perspective, you can see that we do have an accumulation wedge here where basically we've just been accumulating at the bottom of this wedge, and at some point the sellers got exhausted, right? They just couldn't sell anymore. This thing was so bullish popping up here, and so that's why we got this nice pull, that's why we got this nice pump. And then of course this pump had to retest its naked candle. It had to retest the accumulation wedge, and so we came back here above that 19,700 that I was suggesting we had to hold in order to be bullish, because we don't want to break this accumulation wedge. We don't want to break down into this macro downtrend area. And what did we do? We wicked back up on top of my momentum zone, and now we're sitting pretty, and we look like we might be putting in some type of a bull flag. So let's just watch this space. If you were able to buy in on the retest of this accumulation triangle, if you were able to buy in on the pullback that I suggested was likely to happen, then congratulations, Alpha Fam. Boom, you just killed it. Great job. Let's go ahead and just take a look at where our weekly EMAs are. We are sitting squarely above the weekly 4 EMA, so that is a big deal, guys. That means that we are squeezing between the weekly 9 and the weekly 4, having held that 4. Let's jump over to the weekly chart just so that we can see what that looks like. And let me just spread this out and turn off these drawings. And then you can see what's happening here is that we are getting a little bit of a squeeze. Now, what could happen is that we could pop up like this. You see this? Pop right like that. And to the, maybe the 21 SMA or the 21 EMA. And so that's what we would be looking for next if we do start to push above 20,500 and let's just say 50. If we're able to get above 20,550, then a next level to look for is going to be, well, first we have, some, measures that would suggest around 21,000, and that's based upon the, let me go ahead and take a look at our, let's use the, the secondary boss here is 21. If we keep pumping, sorry, I'm going to go to the 4 hours, just the candles are too big on the weekly. Yeah, if we keep pumping from here, then we can get all the way up to 20,800 before we might have some type of serious resistance on this downtrend structure. And then you see we have catastrophic drops from the top of this. So you do want to take your profit. You do want to move your stop losses up and protect yourself, because sometimes we also front run that line. And as you can see, a little bit of front running here, but when we tagged it here, catastrophic drop. So guys, make sure to keep these levels in mind. We could have another push up. In fact, I see that we are pushing right now. So just proof in advertising, guys. Full transparency. I'm not talking out of my rear end. This stuff is likely to happen. And so just an obvious place would be to look at the weekly 9, which is going to be here at 20,500, and then we have the top of this the secondary downtrend, and that's going to be 20,800-ish, and then we could even suggest just some general exuberance around 21,000. And going back to the weekly, right? Going back to the weekly here, we can see that, well, let's take a look at the daily first, because I think, yep, there's the 89. There's the 89 daily at 21,600. So that would also be a key spot to take a look at. You can see that the 89 was right here. The 89 was right here. And then, yeah, so you can see we sometimes get rejected pretty hard from the 89. So the 89 being at 21,600-ish, that's also a place that you'll probably want to look at. And then, of course, from there, if we do defeat that boss, then we could be looking at as far as a 23,000 to 24,000, in fact. So, guys, this move could be potentially very, very nice. And that would put us into a squeeze play on the weekly. But we're neither here nor there yet. And we also have the 20 simple MA at the 22,000. So I'm giving you guys a couple areas to watch on Bitcoin. And you can write those down or just keep them in mind. Of course, we will have hiccups along the way. But mostly you can see that right here around 21,000 is pretty significant on the weekly. Let's see if I can put all my support and resistance areas. There we go. I do have, a lot of lines just that are just kind of gray lines in between here. The main boss is going to be this $24,000 area, though. You can see we very much struggled in this area, and so we could struggle at the 21 EMA yet again if we are able to cross this range. So 20,800, 21,000, 22-ish thousand, and then 23 to 24,000. Just keep your eyes open. Those would be good targets to be looking for if this squeeze does continue to the upside. And one of the things that we want to consider when we are looking at Bitcoin right now is how that volatility is playing out. And you can see that our volatility has now crossed not only the EMA on the BBWP over here on this volatility indicator, but we've also crossed the secondary band of stars. And so I do consider that this is confirmed that we are having a volatility spike to the upside. I think that it would be fairly ridiculous to expect this to just suddenly shoot us to the downside. When we were down here, there was a question because we did have the 4-hour volatility that was still playing out, and so that volatility could have reversed. The 4-hour did take us up as well, but in reversing, pardon me, in changing around, just it could have been the 4-hour that was lifting us, and we didn't really know what the daily was going to do. But now that the 4-hour has pinched off, it's just kind of cooling down. Then we can see that the daily actually took over and our volatility has been pumping to the upside. So just a note on volatility, it does look like this is going to be continuation to the downside, and we can kind of get some idea of how this can go by looking at our Stokes. Now, the one thing that is a little bit troublesome is that our Stokes is getting a little bit high up there, and while this thing can continue to hang out at these high levels, you just have to keep in mind that at some point it may want to flip around, being this high up. You can see these levels where it does flip around at, but you can also see these type of stretch levels. So I'm not going to be too concerned until we get into that 91, kind of a 90 area on the Stoke, but at the current point, we're only around the 80 to 70-ish, and so I think that we do have some ways to run in this move, just if you ask me, guys. As for our RSI, you can see that we did have a little bit of a check back, and that was actually a quite bullish check back on the daily. So we didn't even come down to our line. We did that already with this huge bullish drive of divergence coming out of the bearish control zone, which is a powerful move. A couple weeks ago or a week ago, I was suggesting that these drives of bullish divergence on the weekly usually have more weight to them when you're in this bearish control zone. And sure enough, here we go on the ride up. Okay, guys. And so always you have to be thinking both directions. Don't be a perma bear. Don't be a perma bull. Just be a clever little alpha monkey. And so you have to be aware of where the resistance is. You have to be aware of where the pullbacks are likely to come. And if you're a perma bull, you're just gonna FOMO, and one day you're gonna get yourself absolutely wrecked, right? And if you're a perma bear, you're gonna miss the chance to get in on a healthy pullback and then ride this nice pump to the upside, and then potentially check out some higher levels. Okay, okay? You don't get any rewards for just saying, ah, I knew it was going to happen, right? You don't get any rewards for that. You have to have technical reasons. You have to have some type of, calculable reasons. You have to have some logic that you're applying. And flying by the hip is why 90% of this market just gets trashed. So you are doing a good job, AlphaFam. Thank you for sticking by with me while we work through these different systems to find out what's unique and what works for us in a way that can be reliable. And I think we're starting to develop that system. We're going to fine tune it during the bear market, and then we are just going to absolutely kill it during the next bull market. So, guys, stick with me on that. For Ethereum, of course, we do have a very similar setup. Ethereum was looking weaker than Bitcoin at first, but now we can see, look at Ethereum, guys. Look at this beautiful squeeze play on the weekly. You see the yellow 21 EMA and then the red 9 EMA. They are just squeezing just perfectly in one of those squeeze plays that my good friend Qredo taught me back in the days when I was first learning EMAs, and now I use them all of the time. Because what would this suggest? As soon as we get a positive slope on the 21, you're likely to see a squeeze in the same way that Bitcoin got a squeeze. And so those targets that I was suggesting for you still do remain valid for Ethereum. And I do think that, just a reasonable squeeze would get us to 1400. And then, we could potentially have a stretch goal here out to 1500. And then we'll take it by ear from there. Of course, there are intermediary levels that we could potentially have pullbacks with. But one thing I would like you to note is that while we didn't meet the bullishness for the daily close yesterday, and so we did have a pullback on the charts. Let me go to a 4 hour just so we can see more detail. You can see how we did have a pullback, and that's because we didn't close above my daily momentum zone. Guys, my daily momentum zones are no joke. Pay attention to them. If we had closed on top of it, you could have expected it to pump. Having closed below it, right? You see this red candle. Having closed the day below it, we actually ended up retracting into the momentum zone. And simply the way that you use this momentum box that I've created for you is you don't want to violate the bottom of it, okay? And ideally, you don't want to violate the top of the white box if the white box is underneath the blue box. And since we had our white box here, look at that. Look at that, Alpha Fam. Boom, nailed it, right? This momentum box just absolutely gave you the confidence that when you saw that turnaround above this white box, inside of this blue box, that was the cue. Let's go, right? Of course, you could also be using your EMAs as I've taught you in other episodes, but this is just added confluence, and it's always good to have a couple tools. I try to use all the tools. I don't know if you've noticed volatility, all of these things, momentum, right? Price action, and of course, all of this good stuff. Guys, let's go ahead and and of course EMAs. So what do I use primarily, guys? EMAs, volatility, momentum, and price action. So what do I show you on this channel? I show you price action through the use of patterns, and just by showing if we have an uptrend or a downtrend, right? The supports and resistances, right? And then also I'm showing you volatility, right? Which is of course the different types of volatility measures that we look at, like when it's streaming, when there might be changes in volatility. How this look at this volatility, it's coming to a pinch right at the point of that squeeze play that I pointed out to you on the price action. And so price action and volatility can be matched up. And then of course, what else do I show you? I also show you momentum. And so we're using for example, the Stokes. I'm creating momentum boxes for you to have some type of a logic so that we can actually just visualize where price action is swimming in. Consider these pools, right? Like you want to get off on the right side of the pool. You want to get out on this nice side. You don't want to just go and drown in the deep end, right? And so this is drowning drowning at the bottom of the pool, you want to rise to the surface and get air. It doesn't matter if you're swimming as long as you rise to get air at the end of the day, right? And so, guys, the blue box is important. The white box is just a suggestion, a projection for the next kind of week, right? How it might go. And what's happening now, right? We need to update these momentum boxes. Is that, of course, this one, we now see what happened with it. We didn't close above it, so we didn't pump. We had a pullback. We swam inside of it, and then we got a breath of fresh air. Now we have to update our daily, and so I'll just bring this one over, and so we can see that this is now the light blue color, and look, we're above the new daily. And so if we have, even if we have a pullback today, as long as we close the end of the day above this box, it's going to be very bullish on the daily, guys. No joke. Okay, and then for the previous 2 to 5 day projection, we had a nice bounce off the top of that, an excellent sign. But I do have to update this one. It's lived its usefulness. And so if we use the new 2 to 5 day, right, then what I would suggest is, unfortunately, that zone has risen. So we do need to close on top of this level. And, we really don't want to violate the bottom of the blue box. And we really do not, definitely, we don't want to lose, the bottom of the white box. Let me go ahead and throw on our well, I think I have our momentum lines there. Yep. Okay. So just using our momentum lines, you can see I do mark out the momentum every day, and so I do see that the 2 day Stokes uh, is higher actually than the bottom of this blue box. So I am going to consider the Stokes to be the minimum level here. So for the key levels to watch on Ethereum, if we can hold above 1350 by the end of the day tomorrow and have a candle close on top or above 1350, that is going to look very bullish for Ethereum and going to be in line with the squeeze play. Now, we could have a pullback all the way down as low as 1310, and I'm not going to get worried, okay? As long as we close above 1310, I'm not going to be worried, but I would prefer to see a close above, let's just call it 1320, okay? Because we do have a little bit of a potential to lose our 2 day stochastic, and I don't want to lose that, okay, in order to maintain our momentum overall. And so, in the future projection, and so I would like to close above. Well, let's just average it and just say 1315. If we close above 1315, then I'd say there's still a good chance for bullishness. Now, if we violate, right, if we violate 12, let's call it 1280, then I'm just going to see that likely we're going to test the bottom of our range, perhaps this downtrend. So, I definitely do not want to see us lose 1280. It's just going to be bad overall, okay? So those are your key levels to watch for Ethereum. Now, why did we have those pullbacks? Why did we have those pumps? Because if you look at the DXY, right? If you look at the DXY, well, yes, we did have we did have all of these four resistances that I was pointing out to you, right? The slope, the diagonal, and then also this secondary diagonal, and then this horizontal, they all met in one spot. And so the DXY, the US dollar, had a rejection. The dollar being bullish is bad for markets, and so it being rejected is good. It allowed markets to pump. But then you can't just go straight down. We had to have some type of a check back. If we look at the daily, you can see what happened is it basically just checked back to the 9. Now that's just a bearish check back, and so it does suggest possible continuation. If we had gotten ahead of the 9, that would have been very bullish, but and we did temporarily get ahead of the 9. So there was the potential, right? There was the potential for this market to just flop out. But as it happened, the dollar got rejected, and then it actually it came back down below the 21. And so you can see it's actually squeezing to the downside now. And so this does suggest bullishness, guys, bullishness for the crypto and the stock market in the coming day. But of course, you'll want to check this every time you're about to trade. And the dollar is the most important thing right now, guys. So you do want to watch what's happening with the dollar. Now, with the VIX, you can see the VIX is continuing to have the squeeze to the downside, which I suggested when it was between the 4 and the 9. And now that it's squeezing between the 9 and the 21, this is likely to continue to squeeze down as well, and that also would be good for trading. USDT, you can see that instead of popping up here, which buyers were doing, they were trying to load up on Tether as opposed to crypto, and actually they ended up just respending that cash, and so now we're back into a squeeze play to the downside, facing strong resistance. There doesn't seem to be that many participants coming back to the market, but this does look like a bear flag, and it could suggest a trend that actually does pop us down to this 7% level, and that could be just an amazing trade in the next couple days. So watch this space, Alpha Fam. Gonna cut it short there. And as for our coins, um, what did I say? They're just doing a retest of the wedges that they're breaking down from. If they're on top of support, you could get in on those things. If they're below support, then you would want to be wary. Zilliqa 2%, it could go up to 34 cents. We're at 31 cents ish, right? It could go to my next level up here if it ends up getting squeezed. Not quite there yet. Starting to look good. ADA, let's double check this one. ADA underneath the 9, underneath the 4 previously. Now it's above the 4, getting into a little squeeze with the 9. So ADA could also, it has a little bit more work to do than Zilliqa, but almost there. You do want to see the 21, this yellow line, flattening off just a little bit more so that you could have the potential for a squeeze. A little more work to do on ADA. KDA, beautiful, beautiful pump by KDA. KDA, actually, this is one that I was talking about with my friend Crypto Reda. Of course, we monitor this coin quite a bit. He's actually one who recommended it to me when it was 36 cents a year ago, and I did get in on it at 36 cents. And so it's not one to sneeze at, guys. Look at this level. You see this wick down here, this wick down here, this wick down here. See, my friend Crypto Reda, he does it right, right? He gets in, like, he has great intuition for this stuff because he also uses a system of logic that goes along with it with his EMAs. And obviously, you could see as low as 140 that we had gotten above the 9 there. And so there was the potential, especially with the dollar potentially facing resistance, to get in on this. Let's see what the AR fam is up. Probably anywhere between 5 to probably 8% at max is probably what they're up there right now, assuming they got in with my friend. And of course, so that was a very nice play. And being at these levels where ADA just rockets off of, pardon me, not ADA, but Cadena rockets off of, that was a fairly good play. When you saw this higher low, kind of higher low, and then getting into the possibility of squeeze play with a weakening dollar, that was a good spot to DCA in at these key levels here. Of course, when we were underneath here, kind of breaking down, then the potential to fall down to $1.09 or at least $1.32 was there. You probably could just wait until we're on top of support in order to get in. That's what my friend did. So of course he's using an intelligent strategy. And then you don't full port these things. You just use a small percentage of your portfolio, and then you can make a nice trade off of that. It is interesting that KDA did pump to this white line that I have marked here. Not 100% sure what that line was supposed to represent, but it is interesting that it tagged it perfectly. And yeah, I mean, there's significant candle closures there, probably weekly or something like that. And so I would hate to see this to reject in this area, but this does look like it has a nice squeeze. The volatility, a little bit of a hiccup in here, still squeezing. I'm just not sure if this thing has fully chosen its direction yet. but it does look like it has some power behind it to push in whichever direction it's going to go. And right now, that direction looks like to the upside. The Stokes is still looking pretty good as long as we don't fall under $1.39. KDA is looking pretty interesting to me, guys, and so I was considering to get in on this one with my friend there when it got above the 9 at $1.41. We are having a little bit of a pullback. It's probably still a good entry on this one if you want to take a risk, but I'm not going to give financial advice on that. We did have a huge bullish drive of divergence. This thing could check back a little bit lower off of the EMA. Let me check the 5-day on this one. And Ho, ho, ho. Guys, look at that. Look at this beautiful 5-day. Look at this. It's actually, well, it made a lower low, but it did make bullish divergence. It's putting in a huge drive of bullish divergence from this June mark here, and it is crossing above the 5-day RSI. So, guys, personally, I consider this to be a fairly bullish sign. And while we did get a nice pump out of that, right? This kind of 8% pump, if you just look at the bottom, yeah, 8 to 10% pump. If you got the absolute bottom, no one buys the absolute bottom, but if you got the absolute bottom, an 8 to 10% pump there, then that could be what that bullishness is suggesting. But overall, we do have a lot of bullish divergence coming in off of this one, and so there could be a nice squeeze as well as that volatility. I'm glad that we're taking a look at these things, guys. Of course, I did not want to suggest anything while we didn't have a confirmation on the breakout, but since we did have our conditions, our validations, and our confirmation on the breakout of a Bitcoin, then we can take a look at what the dollar is doing in some of these other risk factors and then suggest, we might be at some good entry points for some of these coins if the bullishness continues. It doesn't have to continue, but if it does, then we are at some interesting points here. Going back to the daily, let's look at CRV. And did I have my EMAs on? Yeah, okay, good. We can see that CRV is also getting in position for one of these possible squeeze plays. And let's look at Flux. Flux is struggling just a bit, but we knew that. I added this kind of a rejection zone up here because I suggested it would struggle with this area, and we could still be working our way down to a 63 cents. So, guys, I'm not going to make any type of commentary on Flux unless it can really secure this area. I just would like to see it above or at 88 cents and showing some life. Otherwise, Flux could it had a great run. It just needs time to cool down. That's what I told you guys. It needs time to cool down. KDA, by contrast, right? KDA, by contrast, has been cooling down for a long time, for months and months. And so, guys, that's one that you might want to take a look at because if it's been cooling down for months, then probably there's some type of mean reversion to come up. ADA, it's been cooling down for months. Probably there's some type of mean reversion to come in. You may want to wait for a stronger position, right? Or have gotten in at the retest down here. But, especially if we get above that 45-cent level, there could be the potential to get all the way up to that 60 cents level. And let's take a look at XRP. XRP is doing beautiful things. It looks like it's having a bull flag. XRP actually led the market up. So I don't know, guys. This thing's just doing beautiful things. And if we, wow, 20%. Yeah, I calculated that one. And it did check back to this area that I suggested that it should check back to. And I didn't expect it to check back that fast. I did expect it to check back a little bit later. But it did check back with these wicks right here. You can see, boom, like we got it. And then it just held on to the next level. And boom, it kept going. And now it's starting to look like it's putting in this kind of W. And let's see what it can do. If we get a higher high here, it's going to be a good sign because we'll have a higher low, and then we'll have a little higher high, and then let's see what XRP can do. But as for now, it has a lower high and a higher low, and so it's just a little bit confusing. Okay, so just We'll find out on that one, but it does look pretty interesting. Guys, there are other ones that have just been killing it. We did the AMA with the CPool, and this is one that was just a lower cap, so I was reluctant to mention it. But I've been watching this one ever since my friend in AR Collective, Conrad, did suggest he was getting into it. And we were doing some analysis on it. And when he got in, I think it was on one of these pumps, I was reminding him of the possibility for a pullback of 20%. But to the bold, go the riches, right? And so he got in. I waited for the pullback. I forgot to get back in on the pullback. It did have a 20% pullback, but because he was in, boom, Conrad, you got a huge 400% or whatever gain off of that. And of course, guys, that was all based upon 5-day analysis. Now is the time to be looking at the macro, right? And so, guys, like if you look at your RSI on the 5-day, look at this. We crossed the RSI on CPool, and then we had a bullish confirmation on this September 3rd-ish, right, where we just bounced off of it, and from there it's just been all gravy. Now this thing is super hot. It's a bit late to get in. Once something goes parabolic, you're just FOMOing in. But guys, I just want to show you the potential that there is in this market because of just how suppressed all of these coins have been. And while CPool isn't a great example because it's not typical, I'm just saying that we've been following this asset for quite some time. It's now back at that 20-cent level that I was suggesting was much better than when people were recommending it at $2, which was freaking insane, right? And all of these different levels up here. And so we are seeing, CPool come in and show its strength, and it also was leading the market. You can find some of these market leaders, these canaries in the coal mine, and they do kind of point the way of how it went. Ethereum was another one, right? So Ethereum, XRP, CPool, you get all these different types of coins that are fairly reliable in how they operate, that they do have intelligent people working for them. They do have, they are active working projects, and then you see them pumping a little bit earlier than the market, and it's usually a kind of a telltale sign. Whereas if you see the S coins and the Poo coins just pumping, then that could be just a garbage, right? Guys, I think this episode has been long enough. I just wanted to kind of show you the hopium of what is possible since you guys have stuck it out during the bear market. And another one that I've been talking with one of the guys in the chat here is Qredo. Obviously, I've been tracking this one ever since we were down here at like 80 cents or something like that, right? And I've just been tracking it all the way up and all the way down. And I've showed you many ways of how Qredo behaves. Unfortunately, this one hasn't been, uh, it hasn't been. I don't know. I don't want to characterize these things anymore. That's the past. But now that we're getting to these levels where we can see some flatness on the chart, let me just go to log because this thing is so parabolic to the downside. That you can see that we are starting to have these huge mean reversions. You do see this pink line that I have up here. This is where I was suggesting that we could pump to on an episode. I believe over here I was suggesting we could kind of reach up to the 89, potentially a stretch goal to that pink line, and we just didn't do it. It was just this asset was just way too weak, as I had measured move to potentially go down here even. It's very unpredictable when you are in these macro downtrends to understand exactly where something is going to pump. We do have this region to break down here based upon these kind of like, just kind of projection lines. But if you do see the main line that I have here, right, this is the wedge that we're operating under. And we are starting to get this kind of, descending wedge, right, falling wedge here, where maybe we could get rejected one more time or something like that, or show something, and then if we break out, right, like even if we just bounce kind of here or something, you know, the we have to be on the lookout for this type of stuff, like just depending on how the market goes. Or if we get a breakout here and then retest it, you have to be on the lookout for this stuff because there's huge opportunities, right? And I just showed you that CPool did a 400%. What was this move on Qredo, right? It was a nice 55%. A lot of these coins are starting to get at interesting areas. They're starting to put into interesting formations that could have breakouts, sort of like what Bitcoin's doing. And we just have to watch that space. Now, obviously, Qredo's not ready. CPool was ready. But I'm just saying, like, don't FOMO into the ones that are pumping to heaven already. Don't FOMO into the parabolic movements, right? Wait for juicy pullbacks, right? Especially if it's like a 20% pullback at support, then that's usually a good sign, right? And if if it does have some bullish price action before that, and just start hunting for these different type of coins that might have those opportunities, and just consider where you would strategically enter into. If we look at the 5-day for Qredo, which is one that we've been tracking here, you can see that similar to CPool, it has just broken its 5-day RSI. Now, so similar to CPool, I'm going to mark that out. And similar to CPool, I'm going to wait for a pullback, right? Because this is the same principle, right? But of course, in CPool, I didn't get back in, right? I didn't get in. And so again, to the bold go the spoils, but I don't want to FOMO into stuff, guys, because this market could drop like quite severely. This could be a fake out. And so here we have conditions, right? We have conditions where we were tagging the RSI on the 5-day. And then we had a validation. We broke out of that 5-day downtrend on the RSI. And if we can pull back and make a higher low here or do something, right? I don't see any divergences on this. This is very weird. It has like no divergences whatsoever. But I would like to see a bullish divergence somewhere, and then make kind of a higher low on this above the RSI. That'll be my confirmation. So we'll have conditions, validations, and confirmations, right? And so since one of the followers of Alpha Commission was asking about Qredo, I did do a little review of Qredo here. I would wait for a pullback, right? I mean, you can always take some profit on these type of pumps, and then I would wait for a pullback and then see what this thing does. If it breaks down below its a 5-day RSI, then I would say that was an invalidation. We didn't get the confirmation. But since we validated breaking above, now we need to validate the confirmation, and the confirmation will be a bounce on this white line. So I'll keep you updated on that one. Let's go ahead and just add Qredo to our watch list, because this is one that the Alpha Fam has been tracking for quite a while. So you know what? I'm actually going to just make a secondary list. Let's put it down here just to watch. You can see what happens there. Guys, again, this episode is pretty long. I don't seem to be able to make episodes under an hour these days. I really apologize for that, but I hope you're finding value in the content. Those few of you who do watch this channel, I think it is pretty jam-packed with good information. And, that was your alpha for the day. Stay safe and happy trading.